Hey guys, welcome back. Hope you had a good week. It is Friday, August 19th. A lot has happened in the last 48 hours in the stock market. No video yesterday. Sorry, I actually had two I did and then didn't publish them with all that news coming out. I was like, these aren't really relevant. I don't have information, and it's kind of just throwing a curveball, so didn't do anything. Anyways, sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us on at Happy Money YT, and a Discord server. Link for that is in the description. We'll just start with the SPY here real quick. Yep, coming down into SLD. Next week it should be maybe range bound a little bit. There we go. But I think we still have bullish legs probably in this bear market rally up until at least CPI, which is next month. There's some data coming out, of course, this month, but the big one will be CPI. So until then, I think the market has room to rally or maybe consolidate. I don't think we'll see anything crazy like this unless there's some external factor, external news that happens. But yeah, so bear market rally, I think, is still engaged. And I think we probably might even make it all the way up to that like 448, that resistance up here. Before September potentially. We'll see. But this was somewhat expected. This kind of consolidation, somewhat sell-off during this week. And next week, I'm thinking next week we should be able to rally. And with GME, same type of deal. Somewhat expected to. This is historically pretty consistent with GME for the first week in SLD. Coming into OPEX, it kind of sells off. And then the next week in SLD, after the options expire, T+2 from today, which is Tuesday, that's when we've had big rallies. So this was the second week in SLD, started that way. A lot of these did. That one too, so that's end of the month. So we could still have our second peak right here coming next week, next 2 weeks, I'd say. Really into the next, into September. So I'm not sure if this is coming or not, but if it is going to come, I think it will probably be, we'll probably have signs of it by Wednesday. If we don't have signs of it by Wednesday, we might be in a little longer term downtrend. Mostly because we did cross bearish on that MACD on the daily here yesterday. And we have a red candle under the 9 moving average. And we've actually never really had that without having a long downtrend, except for one time. Basically after a rally, I'm saying. So we have a rally, and once we cross that threshold, then we've been in a downtrend. This was the one time, but this was in the trough period. This wasn't after a rally. So yeah, it still kind of stands. So it's possible we just dance around for a bit. But yeah, basically if next week doesn't rally, I wouldn't expect much for a bit unless we get news, or unless BBBY or something squeezes and it takes us with us. So that was the hype for last week, why I thought maybe it would rally into this OPEX, which is not as typical, but I think it's happened maybe once. And that's when I went long here. Saw volume coming in, and it's like, all right, maybe we'll rally into OPEX. And I was already bullish on next week, but didn't think I'd get a cheaper price than, basically, it was actually here where I bought in, this 39. And had the rally. It was really just because we were tethered with Bed Bath & Beyond at that point. So yeah, that just basically created more volatility, and then had this downside push into OPEX. So I actually closed a lot of that here for a small loss. Basically once I saw we were tethered to BBBY, and then they basically shut BBBY down with that, starting with the false news that Ryan Cohen sold, when it was really just a filing with the intent to sell, or basically stating that he could sell. But then turns out he actually did sell some, but that filing didn't come, of course, until yesterday after close, which is when Bed Bath dropped down. So in that time, I'd closed here and had a lot of capital. And GME's IV is, it's not bad. It's like 100. It's high, but it's not like crazy high like BBBY. So I saw downside for both. Of course, I didn't know Ryan Cohen actually sold, so I didn't know it was going to be a huge dump. But I decided to short puts on BBY because I did want to take a long position on it, potentially. And also I was fine just theta farming short puts on BBBY because premium is high and it's something I wanted to go long on anyways, for many reasons. One of them was that because Ryan Cohen was in it. And so yeah, yesterday at basically at close, it was flattening here. It already come down maybe 20% or whatever that was from that news. And I looked at the daily options. I was able to get like 36 cents or something for a contract for 13 strike for 1 day. So I was like, that's so far out of the money. And at 13, I'm a buyer, you know, at this point, because I thought that would be a good price. I thought it maybe come back down to 8, but I was like, I think 13 would probably be a good buy. And I didn't think it would come down, of course, by today, because I didn't know Ryan Cohen was going to sell. That was going to come out and the news was going to hit it. But at any rate, I shorted like $100,000 worth of puts, 13 strike, which basically gives me the obligation to buy those shares at 13 strike on BBBY. After hours, as you know, BBBY dumped 40 something percent, and it wasn't Ryan Cohen selling, by the way. This was just the news effect of it. Ryan Cohen, the window that Ryan Cohen has actually sold his shares, if you look at the filing, and I highlighted this on Discord, was actually this area. Yep. So from here to here, I'll draw it. So his selling pressure of 10% of this company, literally 10% of this company, I don't have the draw, was from here, all this bullish price action, all the way up until here. This whole big rally, this stability, did drop a little bit. I think this was on the news that he had intent to sell, or is that this one? I can't remember. Regardless, it was a very bullish, basically 48 hours where he was selling 10% of the company. So this shows that his selling was not affecting the price really at all, and how much buying pressure there is from momentum, market makers, retail. So all of that happened, and then this drop was not him selling. That wasn't his sell pressure. That was the news from his intent to sell. So that's where that drop came, and then it continued on to the after hours. And then this drop was this huge drop from here. So from here all the way down to here, from 26 all the way down to 10, was just some retail selling for sure, but mostly just from the news of it and them taking advantage of it and basically shorting it. So with that, I still think the BBY play is intact. Ryan Cohen was not the reason this was rallying. Ryan Cohen did add some stability for some investors. It did add some momentum somewhere, I think maybe on that Friday or somewhere, where he basically released his filing that he doubled down. But he didn't double down here, it was back here where he bought more. So he was not the reason this was going. This is in a cycle of swaps, whatever, where it rallies every so often, however many days. I think it's in the hundreds, 100 and something days. But you can see here on the chart, like it's pretty clear where it rallies. And this time was more bullish, for one, because it's starting much lower and cheaper, and also because of Ryan Cohen. That made it more bullish, but that wasn't why it was going. And then the momentum just kind of took it over. So at this point, though, still the short interest, I think, is still astronomically high. Cost to borrow is still crazy. Borrow fee. They still have a ton of FTDs. What else we got going on? I can't remember. But basically, everything's still on the table as far as I can see with the BBBY play. The factor that Ryan Cohen left, a lot of different speculation and ideas about why and this and that. I don't really know. I'm not really going to talk too much to it. I mean, yeah, there could be any number of awesome, cool master plans and cool hedge fund trickery that he's doing. I'm not sure. I think the most obvious would be he basically couldn't come to terms with the company on their future plans and he dumped, or he bought in here and they shorted it really bad and he was down, I don't know, 50 million or however much he was down, and the cycle came and it was rallying and he thought, I need to take profits on this. This isn't going to work. They aren't going to change their company, or I'm just going to take profits because I'm up. I don't know the reason. Those two are the most obvious, logical ones without knowing anything because he's not said anything to us. So I would like to hear more information and get some kind of conclusion on why he sold, because that will change my thesis on GameStop a bit. If basically if Ryan Cohen, I feel like would just pump and dump, as it seemed at this point potentially. Not sure if that's what it was. Not sure if there's some big master plan yet. We will see though. By the end of month, I think we'll have some answers, because they said they're going to have an announcement, BBBY, by end of month. I don't know what the announcement is. Lots of speculation on that too. We'll just have to wait and see. But basically at this point, I have a very large position in BBBY. I hope my bias isn't clouding my judgment on it. I do still think there's a play there, but if end of month there's not much news from BBBY, yeah, I'll have to reevaluate. My play is large, but it's manageable because it's short puts, and I'll show you what that means. It's basically it's a pretty safe play. I mean, of course, if it goes bankrupt, if it goes to zero, there's nothing I can do about it. But yeah, it's a pretty safe play, and I'll show you. But anyways, GME, it's been dragged down basically in the mud with BBBY, and seeing them tethered is kind of sucky. So if GME has a big week next week from second week of SLD and OPEX expiring, maybe BBBY will rally with it. That's maybe one thought. Just looking at BBY though, honestly, like this is what I was saying the last few days on BBY. I'm like, well, I want for that RSI to cool off on the daily. This is what we got. We got it very violently, but now we're here. We're back at 50 on the RSI. It has cooled off. It's found this support. It didn't find 13. It jumped past that. It's found it at 10. This might not be the last support. The last one might be 8 something. Not sure, but it's cooled off on the RSI and on all the time frames. So another leg up could definitely be in the works shortly on that. And it might be moving with GameStop. GameStop still looks good on the long term on the weekly. This weekly candle, it's bearish, but you know, we're still trending up. It's still above the 9 moving average. Still got a bullish MACD. We're still looking good on those fronts. Shorter term, the daily, we might just have a little dip like this, like we had back here during the split, or maybe like here. So might not be a long-term downtrend if next week doesn't pan out. If next week pans out, I could see us retesting 45, maybe 48. Maybe it's the squeeze and we just keep going and blow past. We'll just have to see what happens at those resistances, basically. 50 and on up. So I've got some exposure for that, but unfortunately I have a lot of capital tied up in BBBY now until, I mean, options that last until the September 2nd. So I could get out of them sooner if it rips, but that's basically where I'm at now. One other bearish thing on GME, not just this daily chart and coming down, but the borrow fee has been increasingly coming down. And someone's mentioned that that's a good sign coming into the second week of SLD when we expect a rally. That's typical. The borrow fee will come down. Not too sure the logic on that. There's probably some crazy logic on it, but in general, this is not a very good sign for basically their obligations and their margin, as it's cheaper for them to borrow shares. But we still could see it next week. Quick over the E-Trade plays. Got some long stuff because I think now that we've had OPEX and I think now the SLD, the first week of it's over, I think we could continue the rally up until CPI. So got some more long stuff. I like the chart on Starbucks, Rocket. So I actually opened these orders yesterday, did good till canceled, and then forgot about this morning. They all just filled at awful prices right at market open. So yeah, didn't do great on that. But so I opened up the Starbucks call debit spread, opened up a Rocket, and then closed it because I don't like it. Open up CCL calls. Oh, my spy put I opened up yesterday at close was up like 100% this morning, so sold that right off the bat. SPY was only down like 0.5%, so those have been working out well. I didn't open up one for the weekend. Too much time decay, and I'm not sure on next week. Next week might be bullish. Maybe it should have been calls, but so I'm not too positive on that. LYV, I closed this one. It was bullish, but yeah, I'm not sure. I actually ended up closing that Rocket one too. Yeah, just kind of pull some capital. Weber that played, shout it out in YouTube chats, comments. I do listen, I read those, so I was already looking at that a little bit, but you commented on it, and then I put it on my radar, and I actually pulled into it before it had its rally the other day. I'm actually up a little bit on it at this point, but I think it still has some legs on it for sure. So that's a call debit spread, 7.5 and a 10 call debit spread for 28 days. Still in neg. A lot of these bullish plays have kind of suffered the last couple days just with the market overall, but I think they should pick back up next week, and I will be taking profits at some point on those. So my BBBY options, remember I had these $6 leaps, up 1,000% at one point, now they're down 275%, but I shorted the 17.5 calls on it, so turned it into a calendar spread. So now of course these are profitable. These are up 85%, or 1,200. So basically come next Friday, I can close these for minimum or expire worthless, and then I would have made these January 6 calls free, because to open that to play originally it was $550. Then I had to roll it because it was in the money, so yeah, that's how that works. Now the big play on BBBY. So I opened it up as a short put at a 13 strike expiring today. So 1 day of time, way out of the money. I didn't even actually look at the delta, but it was, it was way out of the money. The stock was at $18 and it was a 13 strike for the next day. So at any rate, open that up. It was like $1,000, $1,200 in premium for the obligation to buy 6,000 shares on this account, and then the obligation to buy 2,400 shares in this account. So 7,400 shares of BBY I was obligated to purchase today at a $13 price, which yesterday I would have been stoked on that because it was trading at 18, and 13 was good. Things have changed, Ryan Cohen being out of it. I'm still bullish on it, but I won't be allocating as much. I don't want to allocate as much basically as I did before at this point. That could change if there's some master plan that we learn about, basically. But at this point, without any kind of tangible evidence that there's something else going on, I don't want this big of a play, but I'm stuck in it. So today when it opened up, these were down. I was down like 14 grand on them. Palater, you from Discord, you were shorting puts too. You cut your losses on it, which is maybe a good thing to do. You said Cohen's out, so you're out, and I get that. That was part of the reason I was in, and part of the reason I was in heavy. But I'm happy to roll this because I do think there's still a play there, and I'm still not certain why he sold, and if there is something else there, and if there's something else going on with BBBY by the end of the month, and if this gamma short squeeze is still in play. I'm not convinced at all, because his selling pressure didn't even drop the price. It was just from that news. So to me, that doesn't mean it's over. That wasn't them closing their short positions or covering. They were probably doubling down. So short interest has probably gone up a lot on BBBY. So it's definitely not over. For all the reasons that it basically ran up, those are all still there as far as I know. So this does show the borrow fee dumped. Not sure about that. Here's BBBY borrow fee. It's at 70%. That was the high. It was at 50%, 70%. Now down to 30, but not really any shares available. Let's see, 819. Yeah, that's interesting. So maybe they're switching to options to short it down and not using the shares or the ETFs. Not sure, but at any rate, so today I was expecting, or not expecting, but hopeful that it might actually rally back up to 13, even though it closed at 10. Big bounce back. And it did have a bit of a rally, not quite up to 13. Sometimes on these MOPEX days, you have a big rally into close, especially on the quarterly ones, especially on rebalancing. I thought potentially might have a big rally. So I waited until end of day and I rolled, since the IV is high, I was able to roll this down to $10. So basically I agreed to buy it at $13 and now I've rolled it. So I agree to buy it at $10 for September 2nd is the date. So I almost did a weekly, but thinking about how the IV is high right now, I decided it's better I probably roll it, give myself more time on it, just because I can get a lower price. Because if I rolled it, to get a credit to roll it to next Friday from a 13 strike, I would have to go up to, I think, 11.5, which is still a great roll. But if between now and next Friday, BBY is pretty stagnant and the IV drops, which most likely will, even if it rallies some or drops more, that IV is going to come down. So then comes next Friday when I'm going to roll it again. If the IV has dropped a lot for the next couple weeks, I might not be able to roll it down to 10 for the next Friday or the one after that. So that was kind of my thinking and my logic on rolling it further right now on the IV's high and just trying to get it on one roll, basically, if that makes sense. So yeah, I'm in this one now. I'm stuck in it for now. Beautiful thing about short puts is you typically always can keep rolling it down as long as the company doesn't go to zero. You can more or less get out of the play eventually. So kind of sucks. It's tying up capital, but yeah, if we hear from Ryan Cohen or hear from some Bed Bath & Beyond and it turns into another Gamma Squeeze type play, I'll close those and turn some into shares and then have the rest in capital for GameStop, basically. So that's kind of my plan with that. Kind of confusing, kind of a crazy time. A lot of discussion on our Discord about what went on, why it went on. I do, of course, want some answers. Would like to figure out, was he forced by the government to shut his position down because there's too much? This was breaking the market. Was he trying to get, what was the theory about Citadel and Susquehanna and getting them stuck in their swaps because they're actually net long on BBBY and him closing his position dumped it on them? What were the other theories? Oh, him trying to build capital for BBBY because he has to give profits back because of swing trade rule. So basically all those profits that he made from that swing trade he gives to BBY, so he's helping with their debt. I mean, there's wild stuff out there. Like, the most obvious to me is what I mentioned at the beginning of the video, which might not be true, but until we have, I guess, something else, that's where I'm at. Hope you guys had a good week. We'll see you on Discord. Peace out.